Hi everyone, welcome back to this week's Technical Insights. Global markets around the world suffered a setback last week. Major indices around the world pulled back after a strong inflation data left investors questioning if the Fed might need to wait longer than expected to cut interest rates. The Producers' Price Index in the US rose 0.6% month-on-month in the month of February this year, marking the largest increase since last August and surpassing market expectation of a 0.3% increase. Technology stocks notably came under pressure as inflation concerns once again remain front and center ahead of the Fed policy meeting this week. Before we go further, let's do a quick recap of how the market have ended last Friday. Our Singapore Straits Times Index was down 13 points or 0.42% on Friday. In the Asia region, most of the markets ended mixed. Japan Nikkei 225 Index lost 0.26% on Friday and posted its second consecutive weekly drop on profit taking. Shanghai Composite Index gained 0.54%, while Hong Kong Hang Seng Index fell 1.42%. The People's Bank of China kept the rate on one-year medium-term lending facility at 2.5% on Friday, dashing hopes of any additional monetary easing after a major liquidity injection and rate cut earlier this year to revive growth. On the US side, stocks also retreated further on Friday. The Dow Jones Index lost 190 points or 0.49%. S&P 500 fell 33 points or 0.65%. The Nasdaq Composite Index was again the worst performer last Friday, sliding 155 points or 0.96%. The US tech shares were broadly lower, with Amazon and Microsoft down more than 2% each, and shares of Apple and Google parent Alphabet also fell. Chip giant Nvidia has whipsaw last week as traders worry about the stock's valuation and book profits in the high-flying name. It ended last Friday slightly lower, but was up about 0.4% for the week. Next, let's look at the weekly performance of the key major indices. All three major US indices finished the week trading lower. Blue chip Dow Jones Index fell 0.02%, ending the week at 38,714 points. Broad Index S&P 500 lost 0.13% for the week to finish at 5,117 points. Tech-heavy Nasdaq Composite Index pulled back 0.7% and was the worst weekly performer among the three US indices, settling at 15,973 points. In Asia, the Hang Seng Index ended their 2 weeks losing streak and advanced 2.25% to 16,720 points. The Hang Seng Tech Index also followed the lead from the Hang Seng Index, jumping 4.85% last week to 3,549 points. For the week, our STI Index ended up 25 points or 0.82% to settle at 3,172 points. This will be the STI's second consecutive winning week, with much of the gain coming on the rebound on Thursday. Two of the biggest winners on the STI Index last Friday was Jardine Matheson Holdings and Hong Kong Land. Both their shares jumped 1.04% and 0.62% respectively. So for this week's analysis, let's look at both of these big winners on our benchmark index last Friday. First, let's have a look at Jardine Matheson Holdings. Jardine Matheson Holdings is a diversified conglomerate group. It holds interest in Hong Kong Land, Dairy Farm, Mandarin Oriental, and Jardine Cycle and Carriage. Since hitting a high of $52.57 on 28 June last year, Jardine Matheson's share price has been on a primary downtrend. Price hit a low of $38.37 somewhere on the 30th of November last year, and may have formed a double bottom with the low on 30th October as well, at $38.66. The rebound seems to have gained momentum coming into this year, and the price have hit a high of $43.90 on the 22nd of February. But subsequently, it was rejected at this level as it was testing the red color line that you see here, which is the 200 days long-term moving average. Last Friday, the closing price at $39.79 is getting closer and closer to the double bottom formation that you see last year between the price of $38.37 and $38.66. The MACD indicator is also showing signs that the recent pullback in Jardine Matheson's share price is losing momentum as the MACD line is converging towards the signal line. The MACD line could break above the signal line in the next couple of weeks, and once a crossover happens on the MACD line, where it crosses over above the signal line, it could signal a change in the direction of Jardine Matheson's share price. The latest RSI reading is now 45, 5 points below the 50-point neutral mark, so the momentum is still slightly weak right now. But once the RSI reached above the 50-point neutral mark, the uptrend momentum may accelerate further. The immediate resistance for Jardine Matheson share price will be the 20-day moving average or the Bollinger Band basis, which is the white line over here, somewhere around the $40.70 level. A break above the 20-day moving average, Jardine Matheson share price could retest the 200 days long-term moving average again, now standing at $43.48. Next, let's take a look at Hong Kong Land. Last week, we covered Hong Kong Land, so this will be a follow-up for that analysis. The closing price for Hong Kong Land the Friday before last was $3.24, which was unchanged from last Friday closing price at $3.24 as well. So prices have not really moved much. We noted in last week's analysis, Hong Kong Land share price has been on a downtrend for much of 2023 due to the high interest rate. The low on 25th October last year at $3.07 was tested twice this year, on 22nd January as well as the 5th of March, and held up pretty well, indicating that this is a very strong support level at $3.07. So we reiterate that this could be a strong entry level to look at for investors who want to go long on Hong Kong Land share price. We also noted that the high of the share price was unable to clock a higher high this year, suggesting that the long-term downtrend may still be in play right now. Hence, the high on 29th of February at $3.38 would be the first resistance level to look out for, and this level has now found confluence with the upper bound of the Bollinger Band, making it a more difficult level to break through. However, indicators are showing positive signs. The MACD indicator had a crossover last Wednesday, indicating a change of direction from the recent pullback. The momentum was also increasing in the last 3 trading sessions as the MACD line diverged away from the signal line, moving upwards. A breach above the zero baseline on the MACD indicator would indicate further uptrend momentum. The latest RSI reading is 51. 1 point above the 50-point neutral mark and 2 points above the 14 days RSI moving average. So there is a slight positive momentum in the share price right now. Hence, with a strong resistance at $3.38, which is around the 200 days moving average, the current share price of $3.24 seems to be at a midpoint pivot level. For a trade setup with a better risk-reward ratio, we reiterate the support level of $3.07 would be the preferred entry level for Hong Kong Land. And these are the updates that I have for you this week. Do remember to like, share, and subscribe to stay updated with our latest content. And I'll see you again next week in the next Technical Insights.